welcome to the podcast for the pre-feasibility study details. We would have liked to have done this when we released the pre-feasibility last week, but unfortunately we were tied up with the Diggers and Dealers Conference where there was a lot of interest in this and the timing was just not available to do that. So today, talking about the pre-feasibility into Hillgrove that was released last week, and also associated with that was the release of our Maiden Ore Reserve. That was an excellent first number, 600,000 ounces at a gold equivalent of 6 grams per tonne, and an increase in our mineral resource to 1.7 million ounces at 7.4 grams per tonne gold equivalent. And I suppose before we go any further, I'll just explain that all the numbers that I will talk as far as grade will be in gold equivalent. This is an unusual terminology, but it's a combination of both the gold and the antimony, so we can just use one number. But you must remember that it actually includes pricing and also, more importantly, recovery. So it's a bit unusual when you're talking, especially resources, to have recoveries built in, but that 7.4 number does include metallurgical recoveries. All the numbers we will be talking will be Australian dollars, except where we specifically talk in US dollars, and that is really only commodity prices. So going back to it, our resource, 1.7 million ounces, 7.4, which is a truly wonderful number. The initial reserve, 600,000, we will be expecting to convert more of the resources as we move forward. There's several ore zones that we have not included in this model to date, and we need a bit more work on that before we bring those in, and we look forward to doing that over the coming periods. Our expiration target is in addition to that, and that's circa another 1 million ounces at a similar grade, and we'll have a look at that later on where that sits. We don't think we're exaggerating too much when we talk about our expiration target. Remembering that this resource and reserve puts Hillgrove as the largest antimony deposit in Australia and the 8th largest in the world, and it, as you can see, it has significant gold values associated with it. Our recent drilling at Bakers Creek demonstrated the potential of the depth of this area, as is typical with these sorts of zones. As you get deeper into the field, you tend to get considerably higher gold values, and this is demonstrated at other areas in Australia, such as what you're seeing at Southern Cross Gold and at Fosterville and Costerfield. Our recent hit there, the best one being 31 metres at 2 ounces, 65 grams per tonne, and that's gold, was an excellent hit, and really, we believe, demonstrates the potential of the depth of the field. Running through the numbers, it's a heavy slide, this one, but I think we need to work through it. MPV at 8%, post-tax 157 million and 50% IRR. That's an excellent number. At spot price, it's 383 and 114% IRR. So that is a truly excellent number. Just talking about that, the commodity prices that we've used in the base case for the modelling here is 2,000 US an ounce for gold, 15,000 per tonne US for antimony. The current spot is over 2,400, but the numbers you see here are 2,350 and 23,000 a tonne. The commodity antimony has doubled since we acquired this project, which is a great thing, and we see very great strength in antimony moving forward. So there's a lot of upside to this project right across. All-in sustaining costs, excellent on gold alone, as all-in sustaining cost is calculated as $820 an ounce. At spot, it's actually negative, so our gold is produced for free, which is an extremely nice thought. Our annual production is 41,000 ounces of gold and 5.4 thousand tonnes of antimony, 5,400 tonnes. That is about equal value in dollar terms between the two there. Pre-tax cash flow of 390 million on our base case and 820 million on our on spot. Payback, again, 1 year on spot, 2 years on base case, so that's an excellent result. We've been very conservative on exchange rate at 68 cents and at spot currently 65, 66. The capital cost to build the project on our base case is 75 million. That's an exceptionally low number for what we're looking at here, and that is wholly and solely due to the huge amount of infrastructure on the site, which includes processing plant and 15 kilometres of underground development that is ready to go. So we're in the unusual position of being able to drive into our ore body now, which is a massive de-risking both for project financing and project implementation, because so much of what is normally potentially cost blowout related is already in place and locked in. We will be moving immediately to finish our definitive feasibility study so that we can start moving into project financing. We expect that to be finished by late this year. This PFS is probably 80% of the way to the DFS. So much of what is in the PFS literally won't change because it's fixed. So that makes the process a lot easier. And also we're very lucky because of our location near Armidale and having so many services. We don't have to worry about how we're going to use power because we're connected to the mains grid. We have a bitumen road to site. We have a town of 30,000 people only 20 kilometres away that supplies lots of services. We won't be a FIFO operation, so we don't have a camp on site. There are so many things that we just do not have to do compared to most people who are starting an operation. And we're targeting first ore by early 2026. If all goes well, we have the potential to do that a little bit earlier. Our initial ore reserve estimate, as mentioned, 600,000 ounces. We have a good amount of that in probable and indicated. There is a small amount of inferred that gets dragged into that as well. And our final product is 3.15 million tonnes, I should say, at 6. So that's a fully diluted grade, which is why it's lower than the 7.4 that's in the resource. We've been pretty conservative on every aspect of this, and we look forward to actually tightening some of that up as we move forward and get a better feel for what the costs are. But we think that we've looked at this as conservatively, but also as realistically as possible. Going back to our mineral resources, which includes the reserve, 7 million tonnes at 7.4. That's an excellent number to move forward with. As I say, we have more of that resource that needs to be moved into reserve in different zones that we haven't yet brought on. Plus, in addition to that, we have our expiration target of 1 million ounces. So, it's becoming a very serious high-grade field. We have drill rigs lined up to go. We will be starting drilling within a couple of weeks. We've just got the final permission from the EPA last week so that we can start drilling. So the rig will be on site within a week. Looking at the definitive feasibility study results, most of what we've been looking at doing is optimizing the metallurgical test work. For the pre-feasibility, we've been using production figures from historical processing, so we believe that they're very accurate, but we also believe that we have the ability to improve on those by tweaking some of the systems to help us pick up an extra 1 or 2% on concentrate grade and efficiency as we move through. Because of the nature of the mine and that it has been mined previously, and this part of the mine was run for nearly 30 years as an antimony-only operation, so there's a lot of infrastructure on site, and that gives us a huge background knowledge and again helps de-risk both the mining methods that we're using and the metallurgy. If we look at the upside of the area as well, there's numerous mineralized zones, most of which, even though it's got a very long history of over 100 years of mining in this area, hasn't been touched, with just a few zones concentrated on. There's a lot of work to be done here along strike on these zones. Our current resource areas, they're shown in red. As you can see, there's a lot of infill that's required in different areas of the zone. There was a focus historically on high-level gold, and then a very large focus for many years on antimony only. The deeper parts of the system that one would expect, as typical around the world where these sorts of zones, would be increasing gold, and we demonstrated that from our early drilling. None of that has really been looked at. So there's a huge amount of work to go to really realise the potential of this. We've started an RC rig program. We'll be moving to a diamond rig drilling program in about a month once we settle down the RC. We see that continuing for a very long period of time. There's a huge amount of work to do here, given that we already have 19,000 drill holes in this field. So we do have a lot of potential in the area. And another indication of this is a schematic of the area. The resources that we currently have are sitting in red. The depth potential there, largely untested. It's in the higher grade gold zones. There's a few workings down there that indicate that that's the case, particularly at Bakers Creek, which traditionally was the highest grade gold area. The drilling that we've recently done, that we've talked about before, highlighted there in blue, is some of the deeper zones in the field. There's a lot to be done near surface between these zones as well, but the depth potential is there. Our decline, highlighted in blue, gets us straight into a nice part of the ore body. It has high-grade gold and it has high-grade antimony, both of those at record prices now, so that's a good place to be. But the upside is to extend these workings both to continue mining antimony, but also push down into the deeper levels. And as you can see, it's not that far away from where we already are. If we have a look at our exploration target in red, you can see that all that we've done there extend the current working areas down below. You'll see that there's drill holes already in that. There's not enough drill holes there for us to do a resource at the moment, but there's certainly very, very good indications that the mineralisation extends. And all we've done is extend that exploration target down to the deepest level of the resource. So we don't believe that we're pushing too far here at the moment. There's no reason why these zones don't continue much beyond that, but at the moment we'll leave it at that. So extending down to where we already know mineralisation exists at that depth and infilling. And that's just on several of the areas. There's another half a dozen areas that are currently in resource that are not in the reserve, and they need to be tidied up as we move forward to bring those in. So again, just highlighting the potential upside in both tonnes and grade within this mineral field. The drilling that will be starting in a couple of weeks when the rig turns up, Clark's Gully. This is an area that will help us move the project forward very efficiently and also help de-risk. There's a small open pit in this area already, as you can see there. It is very small. It's realistically a farmer's dam now. It's got a resource sitting on it at the moment. We intend to extend that and tidy that up a bit. This is one of the areas we'll start mining for numerous reasons. One is it provides waste for the tails dam that we need to build. Two is that it provides easily accessible, extremely high-grade mineralisation, and being close to the surface, it has considerably more antimony in it, as is typical in these fields. And it will help de-risk the start-up of the operation so that the underground doesn't have to hit full strength of 500,000 tonnes per annum from day one. It will get a feed from the open pit until we can get the flywheel built up underground, get the teams working and get all the systems in place to bring that underground on. So it de-risks that. It provides extremely high grade, and as you can see, some of the intersections in this area, 7 metres at 22, 15 at 13, 16 at 9, 16 at 13. There's some very high grade zones here, helped by those high antimony grades. So it's a very good way for us to start, lowers the risk, gives us a very good feed grade for the first time, and importantly, allows us to build the tailings dam in this area. At the Syndicate area, this is where most of the underground working will be initially starting. We have a decline in place here. There's a lot of development drives already ready, as you can see. This was an area that was due to be mined and never happened for one reason, essentially low antimony price in the day. So this is an area that's ready to go. It's in very good condition, and it needs a little bit of rehab, but essentially it's ready to go. So that provides a massive amount of scope to, one, extend, but also incredibly de-risk the operation, because the lead time and the risk of getting into the ore body that other companies face developing something new doesn't exist. We know how it's going to behave. We know metallurgy, how it's going to carry on, and we know that it has good gold and good antimony because we can go down there and sample it. Another example across the field, the mineral resource here and reserve sitting in the stripe colours of where it sits. You can see that there's a lot of potential to push all those zones considerably deeper. There are zones that sit in between that largely for geography haven't been drilled, and we look forward to getting in those and drilling those from underground once we get into the mining phase. So there's a lot of potential there just in this area, and the plan is very much to join all these zones together and have multiple means of access to really increase the efficiency and lower the cost of mining this operation. So where are we on our current development path? Our metallurgy is progressing very, very well. We have a significant team of people working on this, and as we say, we're looking at tweaking our results. We already have a long processing history. The plant last ran in 2023, so there's a lot that we know about what the plant can do. We're just looking at improving that. Our underground mining study is extremely well advanced. There's a little bit more geotech and a few things to do, but that's well underway. Our plant upgrade study is essentially complete. The reserve initial release is now done. The pre-feasibility is done, and our definitive feasibility study is probably underrated at 30%. I think we're actually well advanced on that, and our expected timeframe to release of that of later in the year shows how much quicker we are actually doing that than what would be normally expected. And of course, we haven't commenced mining at this time. There's been a lot of money invested in this, which has allowed us to move this project forward as fast as we have. And we've had this project since late November last year. We've clearly demonstrated the depth potential with some of the drilling that we've done, and we'll continue to do that with ongoing drilling from this point. The release of the pre-feasibility so rapidly after getting in, and we see that we can move to mining in the very near term. This is a wonderful thing for a company that's only been in existence for just over 2 years. So the key takeaways, if we have a look at that, we've clearly demonstrated that technically and economically it's a high-grade project. It's extremely viable at conservative pricing, at spot pricing. It does really very, very well, given that we're at record gold and record antimony prices. There's a lot to be said about the financial returns, as we just said, at spot and antimony prices. It's considerably de-risked because of the infrastructure that is already on site, and it's also de-risked by the team of people within the company with extensive experience in doing this sort of thing. So altogether, that creates a significant de-risk. Antimony is looking very strong. I suppose at this point it's worth talking about why antimony is very strong, the driving factor of it. Well, there's several reasons really. One, the largest one is its use within the solar panel sector. It's used as a clarifier in the glass. It makes the glass harder and stronger so it can be lighter. Also makes it clearer, which makes it considerably more efficient. And that is very much driving where it's going. Also, as the historical mines around the world get a bit older, they're moving through the antimony zones. They tend to be getting a bit deeper and getting into higher grade gold, but there's less antimony coming on. So that's helping. And you're also seeing more uses as a general critical mineral going into electronics, various military uses as well. Its traditional uses, which is a hardener of all metals and also as a fire retardant. So it's listed as a critical mineral in most countries, but the solar panel use is really driving demand really quite strongly. And I think we can probably all agree that solar panel use will continue to increase. And given decreasing production around the world, it looks pretty positive for antimony for the considerable future. The potential to increase both is huge within the project. There's still so much work to be done, both along strike on these zones and at depth. And our definitive feasibility has now started, and we look forward to getting that out and then moving into financing options for the project and getting into production in early 26. I'll leave you with our corporate overview there. No need to say too much more. I think everybody's aware of that. So I thank you all for your time in joining. If you do have any questions, please feed them through, and I'll try and answer them. And do contact us if you're interested in obtaining any more information.
Thanks, Ron. A really great overview of Larvotto's progress at Hillgrove, and obviously the potential ahead following the release of the PFS. We do have a few questions that have come through. Just a reminder, if you'd like to ask any questions, please use the Q&A box at the bottom of the screen. Probably the first question we've had a couple of questions on this is just, are you able to make a comment just on the Wogan deal?
The offtake on the antimony side with Wogan is progressing. Unfortunately, it's considerably slower than what we'd like, but we are getting there. It is still happening. We're in final documentation on most things, and hopefully we'll be able to release some news on that in the very near term. On the gold side, we've been looking at some other options. The deal with Wogan on that was that it was a loan and not strictly an offtake. Some offtake operators have shown a great interest in that, and we're discussing with numerous operators on a gold offtake, which I think people will be fascinated to see how that progresses. And again, we hopefully will be able to release that information in the near term.
Thanks, Ron. Ron, another question just about upcoming drill programs. You obviously mentioned Clark's Gully. Specifically, what other programs are in line for the remainder of 2024?
Yes, Clark's Gully kicks off in a couple of weeks. As I say, we only got permission from the government last Friday to kick that off. So that's all ready to go, and a rig will be on site. That's an RC rig. The results from that the nature of RC will be available fairly near term after the drilling commences. A couple of weeks after that, we'll start diamond drilling at Clark's Gully. That was the area where we had the high-grade hits that we've previously released. That's a diamond drill program. The holes are somewhat deeper, so it'll take a little bit longer to get those results out. once that rig commences, we'll start to look at bringing another rig on as we build up the team on site. We don't see diamond drilling stopping from this point forward. There's so much work that needs to be done. We're funded to do that. It will tie in with all of our other plans. So we see diamond drilling ongoing at this point, and we look forward to being able to demonstrate again that the gold potential at depth is good, as you've seen in other similar type mineralisation, but also extending the current resources in various areas and bringing on some of the zones that are currently sitting in sort of high inferred type status and moving those into measured and indicated, and then into reserves. So a lot of work to go forward on that. The team on site is building up as we speak, and you'll start seeing some numbers, within a month from now on the RC.
Excellent. Ron, just probably following on from that, is the target for Hillgrove to hit 3 million ounces?
Oh, absolutely. Yeah, if we bring on our exploration target without going any deeper than the deepest hole already in the field, which we will be doing, that gets us to 3 million already. If we bring on other zones and as demonstrated, the potential of that is great, because if you don't have to put too many meters below the current resource to get there fairly quick, and especially at the sort of grades that we're seeing, you add on ounces really quite significantly when you start getting into high grade mineralization. So I think this is only the beginning. The field has a huge potential to expand both at depth and along strike. I think that's pretty clearly evident from what we've seen. These systems all go to depth, and in the great scheme of things, we're still fairly shallow when you look at us in comparison to other projects that are drilling very similar sorts of mineralization. So it's got a long way to go. These things come from depth, and they tend to get better as you go to depth. So yeah, I think we're very early days into something that could be quite big, and we look forward to being able to demonstrate that as we move forward.
Thanks, Ron. Ron, can you just run through the mill throughput that was released in the PFS, and is there an opportunity to actually increase that to say 1 million tonnes?
The current mill throughput is sort of circa 250. We will be taking that to 500,000 tonnes. That's a pretty easy process. It really only requires a secondary crusher and a thickener. The secondary crusher has already been identified as an issue previously, so we've got a brand new one sitting on site with all the metalwork and everything to put that in. So that's an easy task. That'll take us to 500. In the near term, I think that's a limit on what we can both do via the current declines. Once we understand the field a lot better and put in more infrastructure and potentially more decline headings as we go forward, that does have the potential. The largest potential is probably to get us to a much higher gold producer without increasing the tonnage by putting a higher grade through the plant. And you've seen similar sorts of issues at Fosterville, where their gold output went up significantly, but the tonnes through the mill didn't change, wholly and solely because the grade went up. So I think the best potential for this to produce considerably more ounces is by understanding the ore body better and getting deeper, but also the benefits from the antimony. But at the moment, 500,000 is probably a natural limit between the plant and the ore body at this point.
Yeah, great. Can you provide just some information on the met testing that's being undertaken, and if there are any issues to sort out?
No real issues to sort out. The plant has done what it's done for a considerable amount of time. It's sold both antimony concentrate and gold concentrate. It's done it all before. What never happened before was the taking out until the previous operators were there of the free gold component. So now 40%, circa 40% of the gold that we produce is free gold, and that circuit is in place and has been demonstrated to work. So we look forward to that side of things. The test work that we're really doing is just tweaking what's going on. Because of the production history, we know what it can do, and we're just looking to add 1 or 2%. We're looking at putting a regrind mill to tidy up the gold concentrate a bit more and add benefit there. So we're not going to see any massive changes here, but we just want to understand the ore body a lot better. We're doing a lot of mineralogy. We're doing a lot of predictive thinking about where the mineralogy is leading and what we can do to maximize that, because we do produce gold doré, a gold concentrate, and an antimony concentrate. They go to different sellers, and there's nothing overly complex in this. It's a traditional float plant, but you can always get that extra 1 or 2% by adjusting your grind size and trying different chemicals in the flotation, this, that, and the other, and that's what we're focusing on at the moment.
Look, I think we've got time for one more question. Ron, can you just provide sort of the split between the above and below ground Capex?
Sorry, Andrew, missed that.
Just splitting the difference between the above and below ground Capex, the requirements for each.
Oh, okay. Yeah, above ground Capex is comprised of process plant upgrades, which is about $15 million. Tails dam, which is circa that same number, and the rest of it is primarily underground pre-mining development and stockpile building, getting the underground ready to go. So it's probably about a 50-50 spin at the moment.
Excellent. Well, Ron, I think that's probably a good spot to leave it. If attendees do have further questions I'd like to ask, certainly be in contact. A recording of this webinar will be made available on the website shortly after we've concluded. And Ron, I will just hand over to you for a final remark.
Well, thank you everybody for the time to listen. As I say, any further questions, please let us know. We are looking forward to releasing drill results as we go forward, the DFS as we go forward, and continuing to demonstrate the upside of this field and how we're reducing the risk moving forward because of the incredible amount of infrastructure that we've already got on place. So thanks for the time.